Hi, this is James Shade with Westpac London's end-of-day report for Friday, the 2nd of November. Well, the main news story today was the non-farm payrolls employment report out of the US. It was surprisingly strong. 171,000 new jobs were found. Our view had been based on business surveys and our assessment of how fast the economy is growing that we'd have a much weaker outcome. And in fact, there were revisions to the upside to the previous 2 months, such that over the last, we saw 171,000 in October. The average gain in the third quarter was 173,000, and that's up from an average gain in the second quarter of 66,000 jobs per month. Pretty much every sector except for government posted gains. Manufacturing jobs rose, which was a real surprise given that so many factory surveys, regional and the national ISM survey, had weaker jobs readings. One worry is that retail jobs in the last 3 months, in fact, have risen very sharply. It's a concern in that with so many wealthy East Coast Americans suddenly homeless, it's unlikely that the retail season, the shopping season, November to December, that's so important to retailers in the US, is going to be that successful. And we suspect there might be some significant layoffs of retail staff in months to come. The detail in the report was mixed. We saw a slightly higher unemployment rate at 7.9%, up from 7.8%. Average hourly earnings were flat. There was just a very modest 0.1% rise in hours worked, so it implies that incomes growth is going to be pretty soft when we get figures for October. Basically, good numbers, and there's no doubt about that, but kind of hard to believe. Let's see, factory orders are out as well. They rose almost 5% in September, but remember we already had the durables component up 10% because of a surge in aircraft orders at Boeing. The non-durables component was up just 1%. In Canada, we saw a 2,000 jobs increase, following 50-odd thousand in the previous month. The 3-month average there is running at about 29,000 a month. It was actually down 5,000 a month in the previous 3 months, that's May to July, and earlier this year it was rising at a pace of 46,000 per month in the previous 3 months. So kind of mirroring the US story, with strength at the start of the year in jobs, weakness in the middle of the year, and then strength coming back more recently. There's a bit of a seasonal issue there too. We're seeing this every year. Things pick up in the closing months of the year and a whole range of indicators, and then it all falls over by the second quarter of the subsequent year. That was the main news on the data front today. Quite a reaction to the payrolls numbers initially. We saw stock markets higher, currencies bounce around and so on, but it didn't last. In fact, we've seen a big sell-off in commodity markets in the last hour or two. I think hurricanes, or the superstorm Sandy and the implications thereof, are really starting to broaden out. People are thinking of new ones every day, and oil and gasoline prices in particular have absolutely tumbled. People just can't drive at the moment. The cars are flooded, the roads are flooded, and they haven't got jobs to go to. So we've seen commodity prices today. Well, oil's down 2%, $85.41 a barrel. Gold's down the same amount, $1,683 an ounce, and a 1.5% a price drop for copper to report as well. So that's why in the US the Dow at the lunchtime, what is it now? 4:15 in London, so lunchtime in New York. It's actually down about 1/3%, having been up briefly earlier in the session. Commodity producers and also technology stocks leading the declines there. Europe's still mostly higher. We've got the FTSE in London an exception. It's down 0.05%, but we've got the French market up 1/3. In fact, the German market's also up 1/3%. Spain's up 0.5%, but Italy's down 0.4%. The gains in Europe earlier, again, were somewhat higher. Nothing much else to add other than the Aussie dollar had a bit of a blip today, up to 1.042. It's back down now at 1.037. as risk appetite has diminished and commodities and stocks have eased back. We've got the G20 finance ministers meeting in Mexico over the weekend, so watch out for something from that. Doubtful that anything really significant will emerge. All right, a bit of a crestfallen James Shug signing off for the week. I had the lowest payrolls forecast in the market. The outcome was higher than the highest forecast. You don't always get these things right. Okay, till next week.